Some other insights we gathered was, for me, what really resonated was the whole, the metaphor of the box, which is, I thought was a very visual metaphor. It's a book about how an industry shifts from OPEX to CAPEX. So the box is where, if you look at the fragmented world of transport and logistics, the biggest company in Holland in shipping was 3% market share. And the same is for construction. So if you look at the biggest construction company in Holland, is 4%.
Of the market share?
Of the market share. That means that this industry is very OPEX driven, because if it's CAPEX, it will lead to consolidation. And we both have a fascination for architecture, is that the output of the current technologies, especially modular building, is just ugly. Ugly.
Yeah, so modern buildings are not built with the detail like older buildings.
No, it's just modular, it's just shit.
Yeah, I was going to say, you add in the super founder and suddenly...
No, for me, I mean, whatever, even if I always make a joke, whatever Salar was planning to do, I would follow.
Yeah, I was going to ask you, did you go to robots, or did robots come to you?
The rearview mirror, why we like it so much. But if you go to robotics companies, there has been a few generations of robotics companies. I think now it's arbitrary, but I think we're number 3 or 4. This generation, I think the robot company will not manifest itself as robot company. So the client doesn't really care.
Yeah, they want the outcome.
If it's a robot or not, they just want to have this bricks, this wall being delivered at a certain time for a certain consistency, a certain quality, for a certain amount of money. There's 3 things what kind of what supports our thesis a little bit, but is also fueled by the insights of Monumental, is A, the founder is more a product person than a technical person. Second of all, it needs to go into a market where, and you need to organize yourself around shorter, quick iterations, not only within the company, but also testing in the market. And the third thing is, I think, why it's interesting and how the next generation of robot companies, as I said in the beginning, you don't see it's a robot company. So there's, for instance, there's a car wash company in the US, which is actually a robot company. But
it's selling car wash.
It's a car wash company. I think in venture you can play, you can already do quite well if you know what it's not. So if I play tennis or padel, I'm fine with playing a loser's game. I don't need to be Alcaraz to win. I think for venture that also says the same. If you know what it's not, then you already come a long way. And that's maybe I can elaborate on that, but that's something that where Hummingbird doesn't take any concessions. So if they see one like micro signal where they feel okay, it's not, they pass. Second of all, they especially Baat and Virat, they have so much pattern recognition and so much background, and they got only confidence in their own third eye, that they basically, I frame it as the best founder is the opposite of the good. A good founder is MIT, Harvard, linear, great references, McKinsey, BCG, everybody loves him, and actually that's nice, but the best founders are scruffy, non-linear, have non-obvious backgrounds, not always referenceable, great. No, I think there needs to be arbitrage, you know, I think real, return comes from if you move on something where there's no common consensus yet. I think as what Salar said 2.5 years ago when he started a robotics company, everybody had this misconceptions, capital intensive, I've seen this before, do you know these 6 companies? They've forwarded him videos of robot companies that they fit in this building. Look, they also failed. So I think that's there's fellow robots companies in Europe, and we won't say names, but they got some top tier investors in, and they said they didn't ask one right question.
There's also an extreme, like you could be too contrarian or too independently minded, but ultimately to build a company, you actually need to get people on the same page, right? Like you need to tell a story. But what is a company? It's like you have to build a team. You have to at least convince a few people to join and work with you. And then you actually do need to sell. Like someone needs to, at least on the buying side, be convinced of this. I think maybe the mistake of, especially maybe repeat founders, is because as a repeat founder, you kind of get plugged into like the tech scene. You're usually like at that point pretty well connected to VCs. you might start thinking that your peer group or the group, like the consensus you should follow is the one of like the investor class, basically. And I do think that is like the mistake.
The industry, venture capital industry, has the tendency to take themselves very serious, and also that want to show thought leadership, etc. But if you see, and you see this in #humble. I found these guys 7 years ago. #humble in the basement. Yeah, but for that good bet, there was 9 companies. They were shit. Why Amazon is a great company? Not because of their vision, but how they are organized.
Execution. Execution is the point, yeah.
So I think that's, if I were an investor, I would much more look at the capital efficiency of the founder team. How much money and time did they use to get to a certain point? How they have a tinkering approach to the problem. Salar only spent X to get to this point.
This is a low number.
I don't want to throw numbers around, but the number where Salar and Sebastian got to this point, a lot of SaaS companies didn't even get to market. And Salar has 15 robots running around and proof of market and paying clients. So imagine if Salar could do that in that amount of time with that money, what he could do with a double or triple, 4 times that approach. And that's, I think, a lot of investors overlook. When I invested in Revolut, it was not vision or mission. It was Nikolai who shipped 10 times faster than any company in the world, and still is. And he spent 1/10 of the money.
Episode 5. So, Wouter, Salar, Wouter, thanks for coming in and joining us to speak to us about investing in robotics. So in this episode, we'll speak about investing, a little bit about you, why you picked Monumental, and then we'll go into maybe the future and spotting these specialized venture capital firms within the landscape. So, can you give us a real quick introduction?
My name is Wouter. I work at Hummingbird, where I run a part of their products, which is investing in funds. So Hummingbird is it started in 2010 by Barend. Later on, Virat joined. It's one of the best performing funds in the world. And with the proceeds of what the money they made, they took the initiative to investing into funds, initially their own money and now third-party capital. And that initiative I lead. And then on the side, I do sometimes personal investments. And these are often, like Hummingbird, more connected to the person who starts than the domain they're in.
So how did you two meet? Because you invested personally also within Salar's business, or from Hummingbird?
Yeah, I can tell. Maybe you can tell. But I know Salar for 12 years, I think.
Oh, yeah?
Yeah, so he had a little office at the Kerkstraat where he was building a company called Silk. Mm-hmm. I think when he would have tweaked it a little bit more, it would have been Notion now, but you could compare it with something like Notion, and please correct me if I'm wrong. But
Compliment.
Yeah, and then when I met him, I don't know if it sounds corny, but for me it was love at first sight. We had a great, interesting working relationship during Silk, but more so developed a good friendship.
And you were working back then at a
I worked at
Atomico.
I worked at Atomico, and we did a small check.
They were our first seed investor
into Silk, the company that. And then Salar sold his company to Palantir. He stayed there for a while. We always touched base on everything, and then during his kind of exploration after he left Palantir, he says, I want to take 1 year off to write. And I thought it was very fascinating, because the real thing about why he wanted to write was not because he wanted to be a writer, but he knew for the next thing he wants to start that eloquently phrasing what you're doing is a very important element what you do. So it was a very deliberate action that to say, okay, I'm not here to learn how to write to publish, but I think if you want to build something aspirational, you need to eloquently say what you're doing, which is, I think, in a lot of good founders are very deliberate about their skill set and why they are developing the non-obvious things. So maybe you know that Warren Buffett once said the most important thing he ever learned was learning how to present. And then basically he was tinkering on ideas at the time, and it was between two, and I don't know, two kind of things, was between AI, high level, but he thought he's seen AI a little bit because of Palantir, and then he thought, okay, I want to attack something which is very interesting, something big, and which could develop itself into a generational company. And then in this tinkering, he stumbled upon construction, and he openly kind of shared his tinkering on construction. Like, the strange thing is 30% of GDP. The last 50 years, there was no. The productivity went down. Only in Europe alone, or in Holland alone, we need to build 1 million houses. We have a huge demographical tailwind, so where the people to build them, and the blind focus on, let's say, modular building on 3D. He can phrase it more eloquent than me, but are not the solution. So then, I think in the early thinking, it was more like, okay, if you look at the technology where it's at now, and you take some proxies, let's say, you take the proxy of level 4 autonomous driving, then with that technology, you could, in a controlled environment like a construction earth, you could already drive around. And then the second proxy is the warehouse robots. If you look at the technique, how sophisticated they are, if you apply these two proxies, apparently, then it should be possible to have little robots on a construction site running around, and a brick by itself is a module. Mm-hmm. So, so that was kind of the start of this thinking, but as I recall,
amazing memory, actually.
No, and then I know when he was at the Keizersgracht, or the Prins.
The Herengracht.
The Herengracht. Yeah, there was 60 bottles of Pellegrino on the floor, and a Meccano set with an arm, and you saw Salar like folding, and then
cutting the brick.
And it was like it kind of makes sense. Yeah. So that was the the start, and then I think some other insights we gathered was for me what really resonates was the whole the metaphor of the box, which I thought was a very visual metaphor. It's a book about how an industry shifts from OPEX to CAPEX. So the box is where, if you look at the fragmented world of transport and logistics, the biggest company in Holland in shipping was 3% market share. And the same is for construction. So if you look at the biggest construction company in Holland, is 4%.
Of the market share?
Of the market share. That means that this industry is very OPEX driven, because if it's CAPEX, it will lead to consolidation, if it makes sense. I don't know if this is too much lingo, but so what happened?
It's highly fragmented.
Mm-hmm. So it's very fragmented. And if you also look at the balance sheet of construction companies, they don't leave a lot of space for equity financing. They're very small margins. And the industry is not incentivized to innovate because they get paid on cost plus. So even if they get efficiency, this efficiency they will put on their clients, if this makes sense. So even if the will is there from the construction industry itself to innovate, because it's a huge problem, then the whole balance sheet structure doesn't allow it, due to the margin, due to they are not familiar with equity financing, and even if they are, they're not incentivized to innovate because they get paid on price plus, so even if they have 40-50% efficiency, they're not the beneficiary of that.
So who is, because I'm not a finance person, so if you can like rephrase it somehow. So where does this 40-50% efficiency goes to? Or
the client.
The client?
Yeah.
Oh, okay.
So if you get a house, the construction company puts 12% margin on top of the cost.
Mm-hmm.
Yep.
And some. So if you make the house cheaper, he gets paid less.
Oh,
yeah.
yes.
Yeah.
So there's no incentive at all for him to create huge efficiency here.
Mm-hmm. Yeah, he's just marking up what it costs him to the client.
Yeah. So there's different structural dynamics within the construction companies, which doesn't even give him. And then on top of that, you've got the cyclicality after construction where it's kind of stop and go. So long-term investments are often not done because, you know, you can hit a wall again. Everybody's still traumatized by the, you know, by the crisis a few years ago. So they're not saying, I'm not putting my head out because. So
It
a
will
lot of the
happen again.
dynamic causes that it doesn't come from the inside. And on top of that, we saw a lot of innovations that where the money was pooled, we didn't see, or Salar didn't see, a structural solutions like modular building, putting them centrally due to the cost of transportation. And finally, I think, and that's also part why I loved it, and we both have a fascination for architecture, is that the output of the current technologies, especially modular building, is just ugly. Ugly.
Yeah, so modern buildings are not built with the detail like older buildings.
No, it's just modular, it's just shit.
Yeah.
Yeah, and so I think that's high level. Some of the proxies. So if you look at the state of the technology, if you look at the current need, and on top of that, the demographical pressure, because the average age of a construction worker is 53 years old in Holland. And then you look at, you know, the nature of the construction industry itself. You know, it was a combination of factors where we thought, okay, this could be an interesting industry or company to start. I mean, Salar, and I thought, okay.
Yeah, I was going to say, you add in the super founder and suddenly...
No, for me, I mean, whatever, even if I always make a joke, whatever Salar was planning to do, I would follow.
Yeah, I was going to ask you, did you go to robots or did robots come to you?
No, I again, this is everything I'm saying now is second-hand learning from Salar and not something I invented. So, and I also don't think it's the role of the VC. I think the role of the VC is knowing what not to do. More than and leave it to the founder what to do, if this makes sense.
So what do you think that they shouldn't do, VC?
No, I think VC should avoid highly capital-intensive businesses where you need to return
Exactly like this one.
which is a misconception, which is a reason why a lot of VCs drop it, because they have this notion that robotics is very capital-intensive.
So in your eyes, you were looking at the founder because you knew him or them, and you were looking at mega shifts that you just described, right?
I think I'm not looking for mega shifts. It needs to make sense, you know?
Yeah.
And it needs to be, I'm sorry for this stupid, but it needs to have a why now. Mm-hmm. And the why now is a combination of the state of the technology, you know, the market opportunity, and also, you know, the way you execute. I think that's a very interesting thing, because this is also a little bit looking into a rearview mirror why we like it so much. But if you go to robotics companies, there has been a few generations of robotics companies. I think now it's arbitrary, but I think we're number 3 or 4. This generation, I think the robot company will not manifest itself as robot company. So the client doesn't really care.
Yeah, they want the outcome.
If it's a robot or not, they just want to have this bricks, this wall being delivered at a certain time for a certain consistency, a certain quality, for a certain amount of money. If there's, I need to be politically correct now, if there's 60 very small people doing it, or a robot, they don't care.
Doesn't make a difference. You know, the outcome is what they're after.
Yeah, so I think there's 3 things what kind of what supports our thesis a little bit, but is also fueled by the insights of Monumental, is the founder is more a product person than a technical person. So it's a person that not only understands the technology, but especially how the technology will interact with his surroundings, and even within the product. And if you look at the technical capabilities, more a software than a hardware person, because I think the real smartness in this is more software related than hardware. Second of all, it needs to go into a market where, and you need to organize yourself around shorter, quick iterations, not only within the company, but also testing in the market. So it's not, if you look at traditional robot companies, version 1.0, and in 2 years later 2.0, and then 3 years later 3.0, they're organized like hardware companies. And I think if you really look at Monumental, and if you look at the next-gen robot companies, they're more organized like software companies, small iterations, sprints, whereby you continuously innovate and you can test them in the market. So, and that's the interesting thing here, you can eat yourself into your client because you can offer 1 meter high bricks, like how you say it, walls in October, and in September you can offer 2 meter, and then 2 meter with a corner, and then you can staple from there. So you can every time you can go to the market and increase your value proposition within the client you serve. So that's, I think, also super interesting. And going back, and the third is, and you can go also a little bit deeper into the layering of this, or the staging of this company. And the third thing is, I think, why it's interesting and how the next generation of robot companies, as I said in the beginning, you don't see it's a robot company. So there's, for instance, there is a car wash company in the US, which is actually a robot company. But
it's selling car wash.
It's a car wash company. So I think that's what you will see more and more in the future. And that's why I think you need a little bit more imagination than now.
Is construction like the only, in your experience, only industry that sells this outcome, or every other industry sells the outcome and construction is just, it's very difficult to innovate because the outcome is required?
We thought about this a lot, and actually recently we looked at a lot of companies, and then the question is, where will the value be captured? So if you look at a lot of robot innovation in agriculture, the real value is within the farms and not within the robot companies itself. There is valuable robot companies that supply to agriculture, but there's not a farm that's completely robotized, which, if this makes sense. Mm-hmm. So there's a question, even if there's innovation, where will the value lie? Same for AI, where will the value lie? Will it be at Google? Or we see will be a huge wave of productivity coming, similarly like AI within robotics. But the question is, who will capture it? And if there be like a power law dynamic, so will there be one company capturing most of the value, or will the value be distributed across a lot of companies? So that's very important, of course, if you look at from a venture capital point of view. There's two things very important. Going back to the knowledge of the box, is there a pendulum swing from OPEX to CAPEX? So that's where, that's an interesting thing in every industry. So you can take every industry in the world. If you look at advertising, it was a very fragmented market. There was a pendulum swing from OPEX to CAPEX, and now there's Google and Facebook. Oh. Huge networks effect, huge entry barriers, and now all the little creative, all the advertising is like fragmented, etc. So that's one question. So when will there be a pendulum shift? And second of all, will this value, when there's a pendulum shift, will equally distributed across a lot of companies, or will there be one or more? And then you will get venture outcomes. In agriculture, it's distributed across a lot of companies, so within farms. Within construction, we think that's less the case due to the balance sheets of these, and because of how these are organized. So it's very hard for a small construction company to mimic Monumental. And even if there's a Monumental that would supply to these smaller construction companies, they will never gain the
whole market.
The market. And you can go deeper into that. So going back to robotics, so I think that if you look at the potential for robotics in the total industry, if you look at all the offline stuff, then there's a lot of value to be created. I think in construction, it's a unique case where actually there will be a new company creating most of the value. I don't know if this kind of narrative makes sense.
I'm interested if you consider also other companies within robotics as well, and bonus points if they're in construction.
Yeah. So I'm obsessed by robotics, and as Salar and I, we look at the whole time at where will it be, where like, but within construction you need to have a road in, and I think deliberately or not, bricklaying is a very good inroad for the reasons I just mentioned. You can start small, you can go bigger within this category. If you start with, let's say, other parts of the construction part, you need to have a finished product from day one that could deliver a full solution, which is tougher, if this makes sense.
If you can't iterate, it's
You cannot
be,
iterate, you cannot offer 60% solution. So I think that, and maybe this is even, I don't know how conscious, but if you look at, Salar uses metaphor a lot, that Monumental is not Tesla, it's more Amazon. And I don't know if you use this metaphor today, but
I don't think so.
Not yet.
Yeah.
no, but I think that Jeff Bezos, he was very deliberate why he started with books. Because books is a very fragmented thing where one bookstore could never deliver the full catalog. You can really compete on the long tail, and if you get it right there, you can layer on top other products. So it's not that he from day one this was his beachhead, and this was his starting point. And I think that metaphor is quite similar to Monumental. That bricks is a great beachhead. From there to go into adjacent, because you have not only you already visualize the whole construction yard, but you also build a library of hardware components whereby you could kind of use to go into adjacent, not only within the bricklaying space in concrete, but also later on others. And third, you already have this relationship with your end client. So, and they even, they like to, to buy more from one supplier. They don't
because they trust you already. And
exactly. And you can even avoid additional costs like security or how you say it? Scaffolding, yeah. Etc. So I think that's the right, also the right metaphor. So if you look at a robotics company and then every time you go into a new category, it's harder for another company to go in because you've got the data, you've got the visualization, etc. So it's, over time, it only gets cheaper for Monumental, where another person who starts with another part of a construction doesn't have these benefits and has all these costs where, I don't know if this, if you, yeah, this is kind of...
I'm following.
So yeah, so that's why I think if you even go into construction, it's very hard to find your point of entry where you, maybe in stage one you could compete, but you cannot go to, the layering is different. So as a final metaphor, if Amazon would have started with electronics, it's very hard to go from electronics to books.
So robotics is robotics in construction. I'm just going to put 10 billion, but is it like 10 billion industry or 100 billion industry? How do you measure the value?
No, I think you can look at it from a couple of ways. You can look at it from a TAM, let's say. So construction is 12-30% of GDP. So if you look at it from that, it's big. Banking is 7, retail is 5. So it's kind of 1.5 times banking. So that's big. I don't know the number by head, but it feels big.
Yes.
Second of all, you can look at it from a multiple point of view. So if you imagine that you can run let's say a hardware OpEx-driven company with software margins, then that's also big. So if you take one of the large construction companies in Holland, I think it's Vogels Wessels. How many revenue do they do?
Billion.
A couple of billion, 4 billion, 4.5 billion. They have around 7% market share, only in Holland.
I think margins of 3%?
3%?
Yeah, something like that.
So if you can make
3% margin.
Yeah, it's all low margin. Yeah.
And there you can...
It's not bad for the industry.
They're efficient.
Yeah.
So if you can run hypothetically speaking, run that company that has only 7% market share and 4.5 billion revenues, if you can run that with a 20% margin, I mean, you can do the math. This is only in Holland, if you have 10% market share, on that part, you have a 5 billion company.
So I don't know if I'm confusing
And
terms.
if you do globally, and you do 40% market share, you have 10 zillion.
But I'll give you maybe our perspective on this when we talk to VCs about this, because asking we got to ask about market sizing a lot, and I think there's all these like reports that talk about like the market. It's always like, I don't know, like McKinsey or something, like whatever. Like in 2030, the market for robotics and construction. It's actually always a disappointing number in my view. Like it's a surprisingly low number that comes out of these.
How can they know?
But that's, yeah, how can you know? It's all bullshit in my view, but that's, in a way it might be true, because what they're talking about is selling robotics or leasing them, like the actual like revenue going into robotics from in that industry, which is specifically now what we're trying to do. So for us, the addressable market, like you could segment it in many ways. It's basically the labor that goes into the addressable like labor that we can do, or the labor that's not even being done, right? Like the demand that's there, but that's not even being filled for lack of workers, which is the real problem that we're solving. So to take Wouter's point, it's like if you take, again, like most industrialized nations are like at like 10 to 50% of GDP, and like the rough number you could do is just like divide it by 2. Half is roughly material, half is labor. It's, I mean, obviously that's it's a simplification, but that's basically what it is. And so that's kind of like what you're talking about, right? Like 6% basically is like addressable, and then you could segment it, like bricklaying, the kind of bricks, like the region you're in, etc. But that's kind of like the way we think about it, and not how much money is flowing into robotics, even in like a decade.
So question, so on this pendulum swing theory and consolidation of the industry, I don't know if I'm combining these two thoughts together in the right way, but are we saying that in the future robotics will enable companies, general contractors, to consolidate more market share, or I'm drawing wrong conclusions?
I think there will be Monumentals of this world that will capture 20, 30, 40% of the margin. If you look at what happened in shipping, Maersk has 50% market share, 40, because it's a capex business. Look at cars now, it became from little local car manufacturers to a capital industry. If you look at oil, it went from skill to capital industry. So all these industry models go to capital. With capital comes consolidation. The question is, does it come from their own? Will there be one leading player that will take kind of spearhead this, or there will be an outsider? Within the car industry, it was an outsider. Within other industries, oil industry, it was an insider. But like every industry, over time, will go from OPEX to CAPEX, presumably. And then the question is, and this will always lead to consolidation. The question is, who will be the consolidator?
I think and I'm speaking for them now, but I know that I think Fundamental, Patrick, we were talking about him, they have this thesis, or like this thing they're looking for, which is, will there be in the next decade a kind of like general contractor like 2.0 that instead of working with normal subcontractors is basically integrating all the new companies they're interested in, like Monumental, maybe some other companies, reaping some benefits, but maybe doing some like smarter coordination or planning, or it's an open question, right? Like but you could also envision a model where either a company like us grows and just like takes on more, or like a new layer of GC emerging, or a GC reinventing themselves. But that seems like a big leap right now.
The condition to that will have to be that the outcome is cheaper, more efficient, more productive, really, right? So, because sometimes what we find is within, especially software companies within construction, is not enough that they provide of an output. It's another like a point solution, which doesn't move a needle, and it becomes expensive because it's a percentage of the project, for example, or some high monthly or annual fee. So that becomes expensive and probably doesn't work. Yeah? In the case of a contractor who is combining these technologies, this has to be more efficient for the end user to employ someone like that who can build a cheaper or more productive way.
Yes.
Yeah?
And you also need to be resilient against like shocks.
Exactly.
Which is
You need to have
because
strong
that's the
balance
part
sheets.
because that's the part that I think that's interesting also to me about the history of shipping, like the shipping industry and the transformation is everything that Wouter says is basically both true, but there's also like a shock factor in there, which is you had a first wave of companies that made a bet, and then a shock came, which I think was the Suez Canal crisis. Suddenly, none of the ships could go there. And the first batch of these like new companies, which all look great on paper, actually went bankrupt because of the capital intensity, the debt they took on.
Low margins.
And the people who were like, the companies that did not transform actually survived longer because they just like that could fire their people, like downskill their workforce. Like the same thing construction actually does every time there's a down cycle. They could survive, it was painful. But then after that, a new generation emerged, also with the lessons, and they basically like took over the whole market. So it actually didn't even happen in a single kind of like go, and it tends to be a pretty painful process. Not sure if that's going to happen here as well, but it's not like you could even do everything right and still fail if you're not resilient to these kinds of shocks, which is usually the problem with capital intensity.
To draw similarities. So, Wouter, you mentioned earlier Hummingbird, one of the greatest performing funds.
I can say it because I was not involved in their performance. I wouldn't say it if I was involved.
What would have happened if you were?
No, I don't take any credit there.
When we were researching the companies, there's a publication called The Generalist, quite famous in the VC world. The best venture firm you've never heard of. This is their quote. And the secret is a meticulous approach to identifying outlier founders. So you draw some similarities from how you operate at the moment and identifying these outlier founders. Is there like a process? And is Salar one of these people?
I need to watch out because this is very sensitive topic because it's very hard to put into words, and everybody has his own way of framing it. Let me use my framing of it. I think that Hummingbird defined quite well, and I agree with a lot of them, and I also follow that principle in knowing what it's not.
Knowing what it's not.
Yeah, so I think in venture you can play, you can already do quite well if you know what it's not. So if I play tennis or padel, I'm fine with playing a loser's game. I don't need to be Alcaraz to win. I think for venture that also says the same. If you know what it's not, then you already come a long way. And that's maybe I can elaborate on that, but that's something that where Hummingbird doesn't take any concessions. So if they see one like micro signal where they feel okay, it's not, they pass. Second of all, they especially Baat and Virat, they have so much pattern recognition, and so much background, and they got only confidence in their own third eye that they basically, I frame it as the best founder is the opposite of the good. A good founder is MIT, Harvard, linear, great references, McKinsey, BCG, everybody loves him, and actually that's nice, but the best founders are scruffy, non-linear, have non-obvious backgrounds, not always referenceable, great. Some people, they're colorful, and I think that Hummingbird feels quite comfortable in backing the best founders, where other VCs may shy away from, and that served them well. So I think that's what they call the founder lens, and there's a lot of ways they are looking for, childhood syndrome, or they're looking for any kind of crazy jumps in their upbringing or parts where they can see where somebody excelled in non-obvious places. So that's cues where they're looking for, and again with Salar, there were a lot there, but I think also that Baat and Virat also worked with Salar as I did for some time and got comfortable there.
Mm-hmm. So I wanted to find out what's your, are your views like contrarian, or are you more like consensus-driven person?
I think I could tell the answer by the smile.
I don't know, man.
And
No,
like,
I don't.
and why?
I'm not. I think these are a lot of like if you say in Silicon Valley, everybody thinks they're contrarian, which makes them quite consensus.
Yes.
So I think that yeah.
What does it mean to be contrarian, maybe? Or yeah, what's the?
I think there's one way, and it's what Peter Thiel says is what's one conviction that you have where nobody agrees with you. I think that's
Interview question.
But now a lot of contrarian views are quite consensus. So this is getting harder and harder.
Yeah.
I think it's. I think I wouldn't. I wouldn't say I'm contrarian or not, or consensus. I don't know.
Investing in common sense. Yeah?
No, I think there needs to be arbitrage. I think real return comes from if you move on something where there's no common consensus yet. I think as what Salar said 2.5 years ago when he started a robotics company, everybody had this misconceptions, capital intensive. I've seen this before. Do you know these 6 companies? They forwarded him videos of robot companies that they fit in this building. Look, they also failed. So I think that's which was.
I think it's actually like I can also give. It's easy. We're sitting here. There's it's 2024. When I started this company 3 years ago now, almost 3 years ago, 2021, after summer. Today, I think a lot of VCs are kind of starting to lean into the story of automation, hard tech, going into hard industries, construction, agriculture, defense. That really wasn't the case 3 years ago. And I think the number of things I've heard from don't go into construction, it's a low margin business, almost no startups succeeded there. Around the time we were starting the company, Catera, if you remember them, I think was going sort of bankrupt after burning through 1 or 2 billion.
They're back maybe more, yeah.
In 3-4 years. So it was that was kind of the best example of one of the most accomplished founders ever from Flextronics. And it was, obviously a disaster.
That drew the consensus then.
Yeah. So so it's actually worth I think you're in a way too humble in that a couple years ago, again, don't go into construction, don't do hardware, don't do robotics. That's literally kind of that was really a consensus view. The number of investors, private or institutional, that got this, even the ones that really liked me and or respected me, or they were they thought that they were this is too crazy. This is just outside of the. Why don't you just try another software business or try something more incremental? So I do think that would be my answer to that. It's it is easier to say today where we are.
I just want to avoid the headline. Are you contrarian or not? I don't like the headline. I don't know, man. But I do know the case study Monumental. There was a few things that I was surprised by. The first thing was their dogmatic approach for looking at this company because of generalistic remarks like CAPEX or I've seen it before, I've done it before. So I just, second of all, the questions they ask, I was very surprised, and the line of questioning were not completely wrong. There's fellow robots companies in Europe, and we won't say names, but they got some top tier investors in, and they said they didn't ask one right question.
Is it because they didn't know in the industry, because of ignorance, or because they were not specialized enough?
Following the consensus.
Now, but the funny thing is, we sometimes made this joke that about the construction yard, and you can say the same for investors. Everything the construction worker thinks is really hard for Monumental, it's quite easy, and everything what they think is easy is quite hard. I mean, I'm generalizing a little bit.
Yeah.
But putting things in space, and please correct me if I'm wrong, Salar, is for Monumental quite easy, but for a construction worker quite hard, making these lines and etc. But making consistent mortar
yeah.
For them is but it's quite hard for them. Or building on unsafe surfaces for them don't care. Mm-hmm. But for this is hard. So the same is sometimes for VCs, if you see the line of questioning, or also where they cheer upon, a lot of things that for Salar is not really hard, they think wow, amazing. But for Salar, where he's proud of, and he says this is really breakthrough technology, they don't really see, or they don't really recognize. So that's also, it comes from maybe some background, some, preconceptions, but also because they don't know what great looks like what does it, so there's a, and I think you only know this by experiencing, being close, and
Finding out on the ground, yeah. So
I was going to say, is there a way to learn this mindset of approaching things? Because as humans, we're social creatures, and it's hard to be the odd one, say, in a room and not follow the consensus. So how do you pluck up maybe the courage or whatever the term might be to go against that and go no, these are the hard problems and this is what we're going to invest in?
I don't know. No, I can say something smart now. I think I can just speak for myself that for Monumental over time, I think it even grow on Salar also. This conviction didn't came from day one. I think you were tinkering on this problem for a year and got confirmation every time, and still get confirmation every time. Wow, I think we are still surprised by the market pull. We thought traditional business, we have to kind of think about how we sell up this construction. They will push us out because they will see Monumental as threat. All of these assumptions are true. I mean, it's incredible, no, the reception. And so I think it's not a point in time conviction or not. I think over time, we got, and I think Salar every day, and me too, get more confirmation on an initial idea, which was more a dot on the horizon. Like if you take going to the beginning of this conversation, if you take the why now, the size of the market, and where we're facing, and the state of technology, and you look at other industries, and then it's just let's move on it. So I don't know if there is not, for me, it wasn't a eureka moment of now I've got conviction. It was more a confidence that okay, you've got this, you see it's a huge market, and Salar as a person who, if I had confidence in anything, could do it. So I tend to shy away from general statements on vision or contrarian or, no, I mean, yeah. I don't know, Salar, can you help me here? Because I don't have.
I don't have. But I think what I would say is also this is more my own perspective. As a founder, it's there's also an extreme. You could be too contrarian or too independently minded, but ultimately, to build a company, you actually need to get people on the same page, right? You need to tell a story. But what is a company? It's you have to build a team. You have to at least convince a few people to join and work with you. And then you actually do need to sell. Someone needs to, at least on the buying side, be convinced of this. I think maybe the mistake of, especially maybe repeat founders, is because as a repeat founder, you kind of get plugged into the tech scene. You're usually at that point pretty well connected to VCs. You might start thinking that your peer group or the group, the consensus you should follow is the one of the investor class, basically. And I do think that is the mistake. Whereas the thing you should do is you should think about, if your customer is going to be someone from the construction industry, think about what they care about, which is definitely not the things that investors care about. That you can't be completely contrarian there, right? You can't be we're going to change the way you do everything. That's not going to sell. The whole point of what we're doing is actually that we're trying to plug into their model to actually be very kind of consensus driven in a way. How do you want to work? Let's make sure we work in your way, which comes as a shock to investors in many ways, because it's from their perspective, everything is kind of almost opposite, right? Why are you taking on the operational risk of being a subcontractor, or why are you building your own hardware? But then at least the investors who are capable of following through your reasoning, and they're oh, let me do some reference calls with these customers. They're okay, maybe this will work. This actually makes sense. So I actually think it's also a bit about what is your peer group? Who are you comparing yourself with when you talk about consensus or contrarianism?
Yeah, and also I'm a little bit hesitant. The industry, venture capital industry, has the tendency to take themselves very serious, and also that want to show thought leadership, etc. But if you see, and you see this in #humble. I found these guys 7 years ago. #humble in the basement. Yeah, but for that good bet, there was 9 companies, they were shit.
Yeah, and they don't talk about them.
They don't talk about them. So so
Like a
I want to
gambler.
avoid any kind of that the VC is a special breed of people that know things better or not. I think what VC, there's a factor luck, there's a factor probabilistic frame thinking. I mean, if with Salar at this stages, not me, but other VCs saw if Salar was 10% right, and you believe he's 10% right, there's already enough reasons to invest.
Yeah.
So that's why I want to avoid any kind of, why did you come to this insight, or are you contrary? I mean, I think, yeah, but that's more my personal point of view, and I think maybe Salar shares it, because there's a lot of...
Okay.
Absolutely.
I just wanted to touch on like macro view from founder's point of view. When you started the company 4 years ago?
3 years ago, less than 3 years ago, actually.
Yeah, so there was different macroeconomic environment at that time. Now we are different, in different one. So what are your thoughts on growing business within this changing environment of interest rates mainly? And from investors' point of view, how do you approach investing in startups also within the changing environment?
No, sorry. So there's a few kind of cliche headlines about, the best companies are started in a down cycle, because there's less capital available, there's more money going to quality companies. The founders that do start with a higher sense of conviction. Second of all, the VC asset class is not connected to any kind of interest rates, because it's not financed by debt. So it's quite uncorrelated to interest rates, and it's often quite capital efficient. There's some exceptions. Although in the growth stage there are, like companies like Gorillas and WeWork, etc. These are products of a low interest environment, or the ZERP 2021. But if you look at the stages now, if you look at total capital flow in the market and what is going to early stage startup, it's a subset.
Okay.
But I think that is true from maybe the perspective of VC. But I think back to like the question from what did happen. So I think there are like for me two parts of this, like the VC side and also the customer side, which in a way is more affected.
Customer is affected.
Yeah. But on the VC side, when we started the company, what we were doing wasn't hot at all, or like was just like weird. It's still not hot, but it's like there's really a change in perception around robotics, physical automation, hard tech. There are all these buzzwords, like whether it's like American dynamism, or people start talking about reshoring. Like, so there's like something is changing. So when in 2021, the kind of market correction, like VC hadn't happened, and valuations were like for say a SaaS company or a marketplace company or fintechs were like insanely high. I think that was like still a peak. Yeah. So something did change. If you're a founder, you care about the valuation, the amount of your cost of capital, basically. And that changed. So I had all my peer founders who were like raising pre-seeds at crazy valuations, and in a way we were not like, we didn't do a bad round or anything, but like we definitely weren't like that because we weren't benefiting from that environment. Then like a correction happened the year after, and we weren't really affected by it because there was no like bubble that we were riding anyways. In the meantime, like it feels like the number of like the amount of capital that is interested in something like what we're doing is increasing, and that seems like an ongoing trend. It's not. I don't think it's like at hype levels yet, but it might be like, right. Like if you look at also like the amount of money coming into like humanoid robotics, a new wave of like autonomy companies, like something is happening right now, but it's not. It doesn't really affect us at all. Like I don't think about this. I'm not like changing our strategy based on this. We're not gonna like. What concerned me more, I'm less concerned about it now, was obviously rising interest rates affects like the construction industry really like a lot, and especially in terms of mortgages, like refinancing. Things have, like in the Netherlands, things have softened for sure in the last year, even to the level that affects like bricklaying specifically, for example, but not in a way that like actually hurts us or like. So like the data that I started thinking about with this company was as old as like 2014-15, where like the price per brick laid was in the order of 40 cents per euro cents per brick laid. At the peak, I think 2022, we heard numbers of €1.20, like 3x. And that has gone down now to more like between 80 cents and the euro again. But that's still great. Like that's totally workable for us. That's not like a disaster scenario or anything. So that is maybe like the main change on the macro side.
Yeah, I'm also answering it from the perspective of an asset class. Because for me, going into like in an area of correction into funds and into companies is that's where the more special companies start. So if you look at it from, I understand from a company point of view or from a client point of view it affects, but I look at it from an investor point of view and also an investor into funds. And then you see the best vintages are, let's say, I think the best vintages are being made now. I mean, talk to me in 10 years. But
On that point, Wouter, we spoke before off camera before we started recording this. So could you tell us like a little bit about your fund of funds investing and how you go about finding these specialized VC firms similar to Hummingbird?
Yeah, so the whole idea was, and going back to where we started, is that we're an industry of power law. So only a few companies will capture most of the value that will be created. So if you look at it now, and this is very high level numbers, don't pin me on it, but we are kind of at a 10% digitization of the total GDP. You know, what has been hit is what has been hit is retail, advertising, a bit of banking, and that created huge companies, Google, etc., $1 trillion companies, and some others. And so we think that this rate of technology will only accelerate. So we think the next 10 years we will go from 10% of GDP to 30% of GDP. We think that the most of this value will be captured into the private market. That's where the value will accrue. And also we think that most of this value will be in a few companies. So you saw that if you look at the last 30 years of company building, you see that there's fewer companies that get big, but they only get bigger. So we think that this power law will only get spikier and spikier. So if you look at the last 30 years, almost 60% of all value accrued within technologies within 7 companies. And we think this trend will continue. So long story short, then we want to invest in the private market to be part of that value creation. If you look at that private market, there's almost 5,000 that play this role. There's kind of, and you can kind of take a barbell approach, or it's the huge funds that do well, like Sequoias and Excels and Indexes, maybe you're familiar with them, but the bigger platform branded funds, or it's these tiny funds, these specialized, emerging, niche funds and smaller funds. And actually, Hummingbird is one of them. So this power law is everywhere, this Pareto effect, as you say. It's not only within funds, it's also between funds. So 10% of the funds generate 90% of the value. We want to be part of this 10%, and often these 10% of these funds are smaller, concentrated strategies, whereby every individual company could return a funds 5 to 10 times. So famous funds that did really well was, as I mentioned earlier, Paradigm, 62 times. I can mention more. So that's, and also Hummingbird, sorry. So that's my job now, is to find these funds all across the world, part of these 5,000 that kind of are able to return their capital at least 10 times.
How do you find them?
Mm-hmm. So that's one of the things. So how we find them, and that's why the relationship with Salar is so good, because we want to find the fund that could take the next Tesla. So we want their view of in the robotics space. We want to see how they look at the hardware startups, but being exposed to Monumental, we see a little bit if they get it or not. So that's why our direct exposure in computational bio within Hummingbird, within robotics, within deep tech, within India, gives us a little bit of an edge to not only find these funds, because we know what deals we lost from which funds, and we know what the best companies are. So we're going into, let's say, in defense now in the US, which is DoD space, which is growing. And we know the investors in Anduril and in True Anomaly and Shield, the up-and-coming companies. So we look at their cap table, we see who are these little funds that are in there, and we call them up and say, was this luck, or can you do it again? What was your thinking? So that's how we try to find these people. And then we're building, basically, maybe it's too technical, but then we're building funds whereby where we invest in 10 funds. So basically how we do it, our fund of fund invests in 10 funds. These funds have 12 to 15 core positions, like Monumental. On a look-through basis, we own 1 to 2% in these companies. So we build a portfolio of 150 companies. And these funds are orthogonal, so they're statistically not correlated, both in time, space, or thematic area. So that's kind of how we do it. We have 150 companies. And if on a look-through basis, we hit one UiPath, Anduril, Agent, Spotify, we return the whole fund 3 times. That's kind of what we are selling to our investors. So for us, it's weeding through these 5,000 funds and finding funds that are in categories where the cards are being reshuffled. So what was FinTech 2011 or Crypto 2012, and trying to find lighthouses firms in these thematic areas that could be into the next Moderna, for instance.
Yeah, so is construction
2020.
one of those areas?
Yeah, so that's the question, because so the question is a little bit, is construction, if you do construction in Europe, and I talked about this with Patrick a lot, is there enough quality companies in order to kind of fill your funds in? Or if you're so focused on, and don't you self-select yourself in the wrong, best shit companies? So the question is, aren't you spreading yourself too thin to just define that? Second of all, if you just focus on this, do you have the right benchmark? Because at the end of the day, maybe the learnings we gather from Monumental enables us to move into other thematic areas where we kind of can compare it with. And then it's very hard if you don't have the right comparables and you self-select yourself in one domain. Do you have the right benchmark? We always make the joke that 12 years of impact investing and all these funds miss Tesla. So, you know, so aren't you? And then the third is, does it even make sense to specialize? Because in let's say in AI, I don't think being an AI investor nowadays equips you better to invest in the best AI companies than being a generalist. So then you should only specialize when it makes sense and gives you, as we call in investor terms, edge. You know, you've got unique proprietary sourcing or unique insights, or etc. And the question is, for construction, do you have that? You know, can you pick better because you know construction really well? I think in the case of banking nowadays, it is, if you want to be a great fintech investor, it's better to understand banking balance sheets and risk and compliance than to understand products, for instance. So there's always so I cannot answer it, because so far I think there's the work we've done, and I think Patrick even can acknowledge that we don't see a lot of high quality founders going into construction, and if we do, we don't see that being a specialized investor will help you there, but maybe future will change. But maybe you...
I think the thing that I also have discussed a lot with like the Fundamental team with Patrick is like, it feels like there's also just like more capital chasing robotics, construction robotics or construction companies than companies, like, right? Like,
yeah,
I think that's part of the.
Yeah, exactly.
I think it's actually interesting how many construction tech VCs are there,
but
even excluding the ones that talk about like prop tech.
Prop tech, I mean.
But even just like construction tech, like there are a couple.
Yeah.
Maybe not, and then there are a couple robotics VCs. But then, like, we try to figure out how many companies are there that are interesting.
Not many, no?
It's actually not that many.
Many.
So
there's more capital than people who are...
Maybe to some degree, right? Like, that's also, like, I feel like maybe the thesis or, like, some models could make sense if there would be, like, 10 times more founders coming into, like, an industry, which might still happen, but it also isn't happening yet. No. Like, that's also part of the...
No, that's also exactly. Yeah. That's what I... So it's a combination of, again... And also the question is there space for, because going back to, there's some part of the value stack if you look at construction. You can look at the software part, the BIM, which is nice, but I think they're not sure. Then you can look at the, how you say it, the on-site building, and then you can look at maybe the suppliers of 3D or other kind of, I'm not sure how many big companies there could be, but again, I don't want to show any thought leadership. So far, I think Monumental is one of the few things which we can envision a great outcome. So
the last question from me will be, so are you having a view across the world and across the industries that your fund of funds invest in? Is there any, what's the the most underinvested vertical or industry you can think of?
I can approach this two ways.
Both, please.
No, I think high level. I think statistically, U.S. created the biggest outcomes, and I don't see any changes that it will not happen there. If you look at globally, from a demographical point of view. So I do think that Africa, if you look especially Nigeria and Egypt and India, where we spend a lot of time, from a demographic point of view, could create huge outcomes. Like there could be a Tencent of India, or there could be a Alibaba of Nigeria, just because the population is growing like weed. And so I think that's where I think a lot of people are looking in the rearview mirror in Africa, but I think that it's also maybe hopeful I am, but I think you can be wrong on the year, but not on a decade. I think Africa, especially Nigeria and Egypt and India, are super interesting. And I think a lot of people forget in what state China was 10, 15, 20 years ago, and how quick it can go. So that's maybe from a demographical point of view that people are underestimating there. From a technology point of view, I don't want to show any leadership, but I think just if you look at the rate of technology innovation now, that robotics still is quite underinvested. The question is only, will this value be in companies like Monumental, or will the value lie in the second tier effect, where companies will kind of use AI and later on robotics to increase their margin efficiency, etc. But I know I'm not answering your question. Like what we're trying to do is find people that move on unique insights and don't try to have these unique insights ourselves, and have a very bottom-up approach. Makes sense. So
Makes sense.
And then if I can elaborate, like we look at spaces that have tailwinds, but then we don't say, okay, we put 10% there. Then we look at managers that operate there, and we think, like, are these individuals moving on unique insights where other people don't go? So that's kind of our framework.
Okay, I have one last question. So you said that construction is still to be determined whether it's one of these markets that can give us huge returns, or
No, I'm convinced it is.
You're convinced it is?
100%. Yeah. I also look it up close, but I'm 10 out of 10 conviction on Monumental. So.
But you're asking, I think, about funds, right?
Or my question was going to be like VCs that are specializing within construction technology. Do you have any, what should they be doing? Any advice?
I think they should focus less on thesis and more on people like Salar, not only moving on it, but also, I think that's also underserved in this conversation. I think one of the most special thing about what Salar does is how he's organized, not so what he does. And what I mean by how he's organized is he's organized like a software company around a hardware problem. He's quickly iterating and can test his iterations with the market. I think people are underestimating how important it is in the model Salar is trying to execute. So I think a lot of people are focusing a lot on the solution, but not how our people are organized around the problem. if this makes sense. So if you look at, elaborate, I think why Amazon is a great company, not because of their vision, but how they are organized.
Execution. Execution is the point, yeah.
So I think that's, if I were an investor, I would much more look at the capital efficiency of the founder team. How much did they, money and time did they use to get to a certain point? How they have a tinkering approach to the problem. So I think I think a lot of companies look too much, funds look too much like the big problem and then the solution, etc. I think it's much more important to look at how they're organized, how capital efficient they are, and that's, I think, it's remarkable about Monumental, going back to this. I think, I don't know if you know the numbers, but I can tell the numbers, but Salar only spent X to get to this point.
This is a low number.
I don't want to throw numbers around, but the number where Salar got and Sebastian got to this point, a lot of SaaS companies didn't even get to market. And Salar has 15 robots running around and proof of market and paying clients. So imagine if Salar could do that in that amount of time with that money, what he could do with a double or triple, 4 times that approach. And that's, I think, a lot of investors overlook. When I invested in Revolut, it was not vision or mission. It was Nikolai who shipped 10 times faster than any company in the world, and still is. And he spent 1/10 of the money. So again, that's how I would much more look at that than look at any kind of visions, mission.
Thesis.
Yeah, but it's my personal, but I don't know, what do you think?
I completely agree.
He agrees.
Bingo. Okay, all right, guys. Well, I think that's enough. Thanks, Wouter, for joining us. Yeah, and that brings us to the end of this series.
I don't know if it was insightful. I want to sound smart and intellectual.
I enjoyed listening to it.
Yeah,
It was very contrarian.
Very contrarian. I learned a word here before. I wanted to say it, but I couldn't remember it. It sounded really intellectual. Yeah.